Guys, how we doing? I'm Ryan Mack. Welcome back to the trading, guys. And today I'm going to do my usual and give my weekly review. We're going to look at the fundamental news that we got last week, and we're going to look at the news that we potentially have coming in the week ahead, right? However, before we cover that, excuse me, I'm going to cover oil. So where are we? So let's have a look at the trades that we were in previously. When oil got to here, so let's cover what went right and what went wrong, okay? Let's drag this across because that's the only way that you learn and grow. So in this one here, upon entry, actually, guys, what I did was I potentially didn't follow my own rules. Pardon me. For my own rules, what I always do is I always wait for the candle. I always wait for a rejection here, and then I wait for a candle close in the opposite direction, preferably on the daily time frame, right? Sometimes, look, if you look here on the daily, that's quite a big candle, and it's like, oh shit. You can enter the higher risk, which is bang on here, and blah blah blah. Or the lower risk, higher probability after this candle closes, but excuse me. Sometimes it just melts and then you're like, oh shit, I've missed the trade, right? And that can happen. It's perfectly normal. So here we entered at one buy here. I then entered a second position here after we got this. When this candle came up again, pointing out my fault there when this was coming up, I thought, yeah, fuck it, it's time to get in because it was rejecting this area here, right? Perfectly fine to enter. However, it was a higher risk. Why? Because this candle had not closed bullish. If I had waited till this candle closed bullish, and even this candle closed bullish, it would have turned out that we would never have entered this trade here, and we wouldn't have entered this trade here either, okay? You can see it's pulled down, rejected here, and then this is closed bullish. We could have entered here, which we did anyway. We entered the third position here, went up and came back into profit. So what then happened is we came back up, closed out the profit here, closed out a tiny little loss here and a tiny little loss here. Okay, so overall, because I risk 0.25% per trade, that meant the total risk on the table was 0.75%, not even 1%, right? Excuse me. And the total loss in the end ended up being minus 0.04%. So not even 0.1%. It was 0.04, which is absolutely minuscule, right? It worked out like $34 loss on like a 76 grand account at the time. Excuse me. The account is now higher, but at the time the trades were placed, the account was at 76 grand. So you base it on the 76, not what it says now. All right. Now, as I mentioned, I said, look, we always talk about this, right? When the previous support has been broken, what happens? It then becomes the new support. Bang, retest, reject, melt. My apologies, guys. For any of you guys, I live in the most fucking polluted city on the planet, and it kills me. It makes me cough all the fucking time, so I do apologize. I know it's annoying. It also fucking annoys me. You could enter, look, as the minute it comes back down, it comes back up and retests this, you can actually enter right away without confirmation. You just have to be aware. If you enter right away and try and get a sniper entry for the best price, you are entering higher risk that it may continue to push up. Why? Because there is no confirmation of the close, okay, in your direction. When it got down here on the 4 hour, what I was waiting for here, I thought it was going to come back up, retest this from here, and then melt, where I would have entered, right? What else do you see here? You also see when it breaks past the previous support, comes back up to retest the new resistance, what happens? It also retests and rejects on the 200 EMA, 200 EMA, 200 EMA, 200 EMA. It's a very powerful indicator that. You can't just trade based on it, but it's a good confluence to add to all your other confluences, right? Pardon me. Now, on the 4 hour time frame, let's have a look here. We've got the setup right here, the blue candle with a large engulfing blue. You can drag that across the blue. And what you've been waiting for is for this to go back down, retest, reject, and go. You could have entered there. So why I didn't enter that there is one, it was on a Friday. I just don't enter trades on a fucking Friday, guys. Especially oil, right? Because anything can happen over the weekend. And like we've just seen, what happened this morning when I woke up, there's news that Israel is now fucking hammering Lebanon, right? Pardon me. So that can make it fly, and it's like, fucking hell, don't say I've missed it again, right? I just don't enter trades on a fucking Friday, because you enter on a Friday, you're having to pay a whole weekend worth of, what do you call it? Spread fees and blah, blah, swap fees, sorry, and blah, 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 right? So I just don't do it. I think in oil, actually, if you're in buys, you get paid the swap fees on oil. But still, another reason, it looks good on the H4, right? However, don't neglect looking at the higher time frames. Very important. Look at the weekly time frame. Look. What does that tell you? Does that look like it's fucking going long in a weekly time frame? Absolutely not, right? So that's very important. What I think may happen, may I get rid of that because I don't need it. I honestly think it's going to push down and retest this area. I really do. It's came up here, retested this previous support, which is now the resistance. Again, it's just an intuition / been doing this for so many fucking years, guys, that I believe this can potentially push down, right? Now, well, Ryan, what if it doesn't push down? If it doesn't push down and it just cracks on, what you're really looking for the next best trade, you don't want to be entering a trade here as it breaks, because it might just retest this and then go like that again, fuck off and melt, and then you're like, no. What you like to see is you want to see it push up, retest above here, come back down, retest and reject this. See this small white candle with a large engulfing? Retest this zone here, reject, and then go. So that's going to be your entry, or that's going to be your entry. That's the only two entry points, right? The only two entry points. What you may see, if it lines up with the weekly, is, look, if we... Here's your small white candle, here's your larger blue engulfing. We're still really in a downtrend, right? If you look at the grander scheme of things. So what we may see here, guys, is this. Boom, comes back up, retests this zone, melts, bounces around, gives a liquidity grab, boom, bang, and away we go, right? So this area here is around about your entry. Again, one of the things I like to do is I like to... Where's the weekly? I like to look at the chart overall and think, right, if people are entering this market right now for buys, right? Excuse me, guys. Where are they putting their stop loss? All fucking retail traders right now are putting their stop loss right here. I'll guarantee it. I'll fucking guarantee it. They're all putting their stop loss just behind here or just behind here, right? I'm telling you, that's just what they do. It'll either be here, right, behind this previous low, or it'll be here, or here. It's in this zone anyway. All retail traders will be putting their stop losses here, all right, trying to catch this big move. We're also trying to catch the big move, but I just believe the market's going to move down first, retest and reject this zone, wipe out all their stop losses, creating massive liquidity, lump in their orders, create some orders, and then away it goes, right? So with my method, you can always wait for confirmation. Look, here's the possible sign it's going to reject. Here's what's that? Oh, fuck, that's the weekly time frame. So look, there's an entire week you could have waited. You still could have entered this trade, right? Look, here's a week. Here, you could have waited an entire week, and then you could have entered this trade, right? Especially in the daily. I wouldn't wait a week, obviously. I would just do it on the daily time frame, right? That's good enough for me. However... yeah, look, daily close, bang, and away we go, right? That here, I like to point out things, even if I'm in the wrong, right? Because you guys can learn from it also, and it's a quick reminder for me. See this here, close short, close long, close short, engulfing. That there should have been a warning sign to me not to enter shots here, because it's going to push down further, because that is a telltale sign it's going to put this massive pressure to the downside. that is normally, that's one of my triggers not to enter, and I just didn't notice it, guys. Okay, so I mean, it's fine. We still managed to trade very well. And here's the thing: let's say we lost all three trades and we lost 0.75%. That's fuck all, right? That is absolutely fuck all, because all you need is one single trade at 0.25 and catch one of these. Catch one of these at 0.25, and you've already completely made that three losses back. Plus, you're in profit, right? Just with my method, because I do swing trading. All right. So don't worry about that. What I'll do now is we'll now jump across. We'll do our fundamental work, our markups for the fundamental data, and then I'll come back and we will look at potential trades for next week. Okay. There hasn't been many currency trades I would take a toll right now, guys, and sometimes that happens. I fucking hate saying that week in, week out. It's just what happens. It's just my method of trading, right? Fortunately, we have Lee in the group who predominantly does scalp trades, and he is very fucking good at it, as you know. And you guys can pretty much catch a trade, or at least two trades every single day, right? I don't like to say that, but you pretty much can, right? There'll be an odd day where even Lee's like, lads, there's fuck all today, I'll see you tomorrow, and that just happens. But most of all, Lee's pretty good at finding you guys a scalp trade at least once or twice a day, okay? For my method, guys, it's a very different method. Sometimes if I wake up in the morning and I see 8 fucking entries, be under no illusion, I will take 8 trades, right? But also, if I wake up day after day, week after week, and for, 8 weeks, there isn't a single fucking trade which has presented itself, I will not take a trade. That's just the way it is, guys. I'm very fucking rigid on my rules, all right? Like I always say in the videos, we are not here to trade. This is not a casino. We are here to make money, all right? So if the market presents itself, I will take a trade, lads. If it does not present itself, I will not take a fucking trade. And that's just the way the cookie crumbles. So now what we're going to do now, boys and girls, is write down trades. We're going to write here strong, weak, and neutral, okay? For anyone who's new, I know you'll be thinking logically, why are you doing strong, weak, and neutral, not strong, neutral, and then weak? Because that's logical, right? Neutral being in the center. Excuse me. It's because what we do is we write down all the economies / currency pairs which are strong, all the ones which are weak, and then the ones which are neutral. At the end of that, we cross out the ones which are neutral, and we pair up strong economies with weak economies, and we trade strong against weak. That's how we do it. So that's why we put strong here and weak in the center, so we can easily match them up without, crossing over fucking neutral in the middle, which becomes annoying and it looks shit for the eye, right? It's not very aesthetically pleasing. Neutral. Okay, so it's going to look like this. All right. Now, again, for any newcomers, everyone knows about Forex Factory, okay? Forex Factory is aesthetically pleasing on the eye for doing our weekly reviews. It's very easy to go through. In general, where I get all my data is actually here. It's called Trading Economics, right? So it's tradingeconomics.com. It is 100 million times better than Forex Factory. One, you get far more information and news, far more. You might look on here and there's like 12 items of information for a particular country, and you look on Forex Factory and there's only 3 or 4. It's like, wow, they're missing a huge piece of the fucking puzzle, right? Excuse me. Also, the news gets released here far quicker. Let's say you're a news trader, which we are not, but if you are, and you want to trade like NFP, for example, right? When you look here and it says, NFP's at 7:30, the minute the clock strikes 7:30, the numbers just go bang, and they're instantly on your fucking screen here. If you then look at Forex Factory, it's still going like this and spinning for anywhere between 5 to 10 minutes. It hasn't even thinged yet. And when the numbers drop here, when you look on your trading platform, you will see the candles haven't even moved. But yet the minute the numbers drop on Forex Factory, you'll see the numbers are flying because most people use that. So I prefer to use this, okay? However, for the use of doing fundamental weekly stuff, then I just use this because it's much easier to kind of cut through, all right? So without further ado, excuse me, guys. So what I do is, again, I always repeat myself. It's because we never know who's a new member, right, and who's watching a video for the first time. So I apologise for anyone who watches these videos all the time. It's like, fuck me, this guy keeps repeating himself. But trading is just about repetition, all right? Habit. So what I do is I cover each economy / currency individually, except for New Zealand, Aussie, and China, because they're all very closely correlated, okay? If China economy is doing well, it will give strength to the Aussie dollar and New Zealand dollar. If the Chinese economy is not doing well, it will bring weakness to the Aussie dollar, okay? I won't cover why that is because it's a full fucking video on its own, which I have covered previously. So if you want to understand why that is, you can go and check out the video in Swing Trade Education, okay, when I cover fundamentals. It's on there. So let's have a look. New Zealand trade balance. Yeah, New Zealand's fucked. They may as well trade in chocolate coins because their currency is wank. Flash manufacturing PMI is down. So every single country in the world has manufacturing PMI and services PMI, okay? But not every country is a manufacturing country predominantly, and not every country is a services country predominantly, right? So, for example, the UK, although we do have manufacturing, we are a services country. We provide services. We let Russians and Arab launder their money in the Bank of London, City of London, and all this shit. So that's a service, right? We provide, tax services where Russian billionaires, they'll buy these fucking mansions and they won't live in them and they'll use it as like a tax write-off, So we provide services like that for these fuckers. And what else? But then, of course, when it comes to Japan, of course, Japan has services. However, it's a manufacturing country, right? Everything you fucking look at says made in Japan and stuff. Same with China. China has services. However, it's a manufacturing country. So that's just how it goes. France is a services country. Germany is a manufacturing country, right? Although each country has both. So when determining if this is strong or weak, this is a fantastic example here. Aussie manufacturing is bearish. Anything below 50 is bearish, okay? Anything above 50 is bullish. Now, I'm going to explain this here, this one, services as well. So, manufacturing PMI is getting even worse. So that is real weakness for the Aussie dollar, okay? Because it's already bearish, but it's already dropping in bearish as well. Excuse me, 48.5 to 46.7. That's not good, okay? That's getting worse. When we then look at flash services PMI, that's not bearish. It has dropped significantly from 52.5 to 50.6. And people that don't understand fundamentals will look at that and say, oh, fuck, that's weak because it's dropping, so that means bearish. No, it doesn't mean bearish. Anything above 50 is still bullish. It simply means things are getting worse and things are slowing down in terms of the services which Australia provides. But in this scenario right now, it's still bullish. So this is classed as mixed data. One bearish, one bullish. So it's like, things are slowing down. So what we kind of forecast and predict for the next time we look at this, next week, next month, etc. When this then drops to below 50 and this remains below 50, then you're like, okay, Aussie dollar's now, going into weak territory, okay? And you need to take that into account. The rate is 4.35, so there's no rate cuts, okay? Aussie CPI year on year is dramatically dropped. So again, that's negative news. That's not good news for, the Aussie dollar. China leading index, yeah, and China's dropping as well. That is not good. So for me, I'm now changing up. Oz was previously strong for me. I'm now putting Oz under weak, AUD under weak, and NZD remains under weak because it's still dog shit. Obviously, we do not trade the Chinese yuan renminbi. We just look at it in terms of fundamentals. Next week, what have we got for these three currency pairs? Let me have a quick read, guys. We've got manufacturing PMI for China, which is, China is a massive manufacturing. Their whole fucking economy depends on manufacturing, right? And that's massively bearish. It's not massively bearish, but it is bearish, sorry. Non-manufacturing PMI, that's still above 50. So we need to see what this comes in at. If this comes in below 50, like 49. Even if this comes in at like 49.9 next week, that's like, oh fuck, right, for China. Casing manufacturing PMI as well. We need to see that. They're predicting it, they're forecasting it's going to go up. Both of them. Let's see if they do it. It's not impossible. They could do it. But China is in trouble right now in terms of manufacturing. Okay, so we really want to see China's numbers next week. Remember, if these come in strong and bullish, it potentially provides power to the Aussie dollar. Okay, they're positively correlated, which means they move together. If one's doing well, the other will do well. If one does bad, the other will do bad. Okay, then you get things like the United States dollar and the Aussie dollar, which are negatively correlated. So if US dollar is doing good, Aussie dollar will move negatively. They'll move in polar opposites. That will do bad. If US dollar is doing bad, Aussie dollar will do good, right? I won't get into why that is. Again, it's a fucking entire podcast on its own. That's to do with risk on and risk off and blah, blah, blah. Okay? But that's why it is. Let's see. Manufacturing. So we want to see these numbers next week for manufacturing for China. Okay, it's going to be very important for us in terms of trading the Aussie dollar. All right. Retail sale month on month. We want to see it. We don't really care, but we do want to see it because it's only month on month, right? It just gives you kind of instant insight as to what way the markets are going. Building approvals as well. We want to see that previously was 10.4. It's minus 4.3. That's not good. That means buildings are not being approved. That means mortgages won't be approved. If mortgages aren't approved, that means people aren't getting money to buy a house, and therefore people aren't spending that money on buying the fucking houses. If people aren't spending that money on buying the houses, that means that these huge chunks of money are not going back into the economy, which means the economy is dropping, which means the currency is dropping. You see, it's all very common sense, by the way. There's nothing really hard about this. It's just really understanding what they mean. But once you get it, you're like, fucking hell, that's obvious. You know what I mean? It really is fucking obvious, guys. It's just you sometimes need people to point it out to you and be like, this is what it means. And you're like, oh my God, that's so obvious, right? Let me just check. GDP index, bank holiday just said. Okay. So next week we want to see, we've got some big news that we want to see. All right. Now we start doing one by one. Canadian economy. Always look at last week and then this week. Pretty shit. The Canadian economy remains shit. I mean, this is GDP month on month. It's increased slightly, but it's dog shit, right? Manufacturing PMI, we want to see that. OPEC, GMC meetings, IV PMI, we want to see that, but it's not until next Friday. The previous was 48.2, bearish. They are anticipating it increases to 50.3, which would switch it into bullish. However, we need to wait and see. For me, Canadian dollar is still weak, all right? Their economy is dog shit. Just remember, as always, with Canadian dollar, it's very closely pegged to oil. So if we look at oil, if this then comes down and retests here and we start entering massive oil buys, we have to remember that if oil has a massive push to the upside, it will give strength to the Canadian dollar. You'll be like, why is the Canadian economy shit? But when I look on, USD Canadian pair, Canada's flying. It's showing strength. It's because of oil, right? It's not because of the economy. I apologize, I keep wiping my face, guys. I have clearly drank too much caffeine. I'm fucking out my tits, and my moustache is sweating like fuck. And it doesn't help that I'm sitting in the corner. Look, with this is like my little office, and the sun is just fucking beaming in and melting me. Wait, I'll see if I can close this curtain. Fucking redders. Right, let's try that. So that's why I keep wiping my stash. I'm fucking melting in this corner here. Let's see what we've got. The Swiss franc is always seen as it's called. That's why people say it's safe as a SWIFT. It's always a safe haven. You can see that they've cut rates by 25 base points. It was also anticipated they were going to cut rates, so no real shock to the market. However, it will give some weakness to CHF. Yearly retail sales manufacturing. I mean, it's not a manufacturer. You know what the fuck does Switzerland make? Absolutely nothing, right? So we don't really care about that. CPI month on month. Unemployment rate, yeah, but not really big news next week for the Swiss franc. For me, I always put it in neutral, but I'm potentially going to put it in weak just now. Right, I'm going to put CHF in weak. What else have we got? Euro. Let's have a look. French flash manufacturing PMI. Now, although this is important, just remember France is not a manufacturing country, it's a services country, right? So we always kind of anticipate and expect this to be below 50, okay? If it's ever above 50, that's fantastic, but we're always prepared for it to be below 50 because it's not a manufacturing country. It is, however, a services providing country, and you can see it's massively dropped. So not only is this bearish, French flash services PMI has now dropped from 55, which is very strong, to 40.3, which is pretty poor. Okay, so that's not good for the euro. German flash manufacturing. Germany is a manufacturing country. You can see it's fucking melting. It's way below 50, so that is not good. German flash services PMI, look, it's still bullish. However, look, it's dropped from 51.2 to 50.6, which means we could then anticipate the next one to drop in below 50, right? This is not good for the euro. Flash manufacturing PMI, look, 44.8. That's fucking shit. Flash services PMI, although this one is still bullish, it is dropping dramatically, right, from 52.9 to 50.5. They predicted it 52.3, and it's way, way, way below what they predicted. Consumer climate, yeah, it's not good. M3 money supply, it's okay. Private loans has increased slightly, but it's just not enough, in my opinion. French consumer spending month on month. French prelim CPI month on month has dropped. Fucking hell. Spanish year on year is fucking melting. The Eurozone is wank. So Euro, which was previously strong for me, is now moving into weak, guys. We're now looking for things to reverse, right? Now, when we come on to Japanese yen, I'm going to cover that. Although Japanese yen, the Japanese economy is not strong, the Japanese currency / economy is a safe haven currency. It's never too volatile. So what you will find is, even if the economy is not doing too well, right? Once fucking USD, Euro, and Pound, and Swiss franc, they all start fucking crumbling and melting, which is going to happen shortly. All the big institutions will move their money from USD because it's like, oh shit, we're going to melt, we're going to have a recession, panic stations. They will then move it from that, and they will then put it into safe haven currencies like Swiss franc and Japanese yen and gold. I know it's not a currency, but you know what I mean. And so on and so forth. Okay, so you will start to see pairs like USD, Japanese yen melting. And you're like, why is that melting? But the Japanese economy is still pretty poor. It's because it's a safe haven currency, and we'll kind of be moving to sentiment from being risk on, where people invest in USD and pound and euro, to risk off, where people invest in gold and Japanese yen and Swiss franc and stuff. Okay, that's called the sentiment. Risk on and risk off sentiment. All right. So that can happen. If the economy's poor, you can see, Japanese yen fucking, going strong against other stronger economies because of that reason. All right, but I'll cover it in a second. See what we've got. Holy shit. Look at what we've got next week. So again, as I always mention, for the euro, we only really care about Germany and France, right? If we see Spanish manufacturing and Italian manufacturing, if it says year on year, yes, we will have a look at it. It's a good indication, all right. But we don't. If it's like month on month, we don't really give a shit, right? We only care about France and Germany. Of course, yeah, we've got tons of news. I won't go through everything. You can see it for yourself, for fuck's sake. Tons of news next week. So we really want to see what these numbers come in as next week. Next week, I believe, is NFP, non-farm payrolls. It's the first Friday of every month, okay? So be very cautious. Next week is a massive news week. So for me, just to recap, euro is weak, all right? Let's look at the pound. So look, the UK is not a manufacturing country, but you can see we're still above 50, 51.5. Yes, things are slowing down. However, as it stands right now, pound is still strong. It's like if you imagine being on a roller coaster, right? And you go fast, and then just as you're getting to the top of the hill, it starts to slow down and go. And it just slows right fucking down, doesn't it? And then it just goes fuck off, and it just melts. That's kind of where the pound is right now. The pound isn't about to melt just yet, but it's right on the fucking cusp of this hill, and it's just coming over the edge, if that's how you want to look at it. That's just how my brain works, right? That's how I view things, and that's what's happening here with the British economy. Okay, it's still strong for now, guys. So I wouldn't be selling pound yen right now. Absolutely fucking not. But we want to see what the next numbers come in as. Okay, so for me, pound is still strong. Pound has been great so far. Excuse me. Next week, what have we got? We have got tons. Oh, have we got tons of news? It's manufacturing, okay. Services PMI, we want to see that. Construction, yep. Revised business investment quarter on quarter. Nationwide, final GDP, we want to see that. Nationwide HPIs month on month, yeah, we want to see it. So yeah, let's see what pound brings. But for me, pound is strong. Okay, let's see what it brings next week. Moving on to Japanese yen. Japan is a massive manufacturing country, right? And it's still negative, and the numbers are actually dropping, so it's still not good, still not there yet, right? SPPI year on year is sticky, hasn't moved. It's better than anticipated, but it hasn't changed since last year. Okay, Bank of Japan core CPI year on year is sticky, it hasn't fucking moved. Tokyo core CPI year on year. Core just means things like energy and like grocery shopping has been taken out of it. Okay, that's all that means. It's poor. It's dropped. So for me, Japanese yen is still weak. Okay, it's not becoming strong. They are fighting their way out. Next week, we've got a lot of good news that we want to see. Well, a lot of news. We want to see if it's good or not. Next week, unemployment rate, housing starts, yet retail sales year on year, manufacturing PMI, monetary base, yet. So we want to see this, guys, okay, and see what it comes up as. So for me, Japanese yen is weak. We have got fuck tons of pairs which are weak right now, in my opinion. And last, but by no means least, let's have a look at USD. Sorry, I need to look at last week. Fuck, we've got tons of news here. Flash manufacturing PMI, melted dog shit. Flash services PMI, it's still strong, but you can see it is getting weaker. Okay, so it is starting to come down, although that is still bullish. So this would be classed as mixed data, not weak, not strong. It's mixed, right? Let's check the rest of it. Composite 20-year HPI year on year is dropping, so that's showing it's things are starting to slow down, right? You're not getting the strength from USD anymore. It's starting to kind of fold over and melt. Richmond Manufacturing Index melting, consumer confidence plummeting, new home sales plummeting. Don't be fooled that is green, right? And think, oh, it's green, so that must mean it's good. No. The reason why it's green is because it was anticipated that we go to 699K. It came in better than forecasted. So, but if you look at previously, it was previously 751. So it's taken a massive hit, a massive drop. So that's not good news. It's bad news. Crude oil inventories. This is lining up perfectly. So there is more supply. So when it goes to massively minus, that means there is more supply than there is demand, right? So, and when there's more, sorry, talking shit, that means there's more demand than there is supply. So when there's more demand and less supply, we are then potentially looking to take buys, right? And what does that line up with? That lines up with exactly what we want to see here, right? We just want to see this come back down and fucking fly. I just want to see a nice liquidity grab. I'd love to see a move like this. If I saw a huge liquidity grab like this, or even like this, I would cream my pants, right? That's our entry to fucking get in the market. And we're potentially looking to take oil from down here up to here, guys. So it will be a fucking blinder of a trade. Very small risk and potentially a fantastic reward, okay? Areas of interest will be here. This will be a kind of TP1 here in case it rejects here and then melts again and then goes, which could happen, okay? But really, the TP2 will be up here. What else we got? Final GDP quarter-on-quarter, 3%. Yeah, so it's sticky. Hasn't moved. Unemployment claims have decreased, which that's positive news. Core durable goods orders have increased. Durable goods orders, yeah, that's not good. That's shit. It was previously 9. They just predicted it to be -2, which it came in better, so that's why it's green. Okay, but it's not good news. Final GDP price index quarter-on-quarter, sticky. What else we got here? Pending home sales month-on-month has increased, so that's okay. That's a bit of good news. Core PCE price index month-on-month, not good. It's not massively bad, but it's not good. It is definitely softening. Personal income month-on-month is not good. Personal spending month-on-month is not good. Prelim wholesale inventories month-on-month is sticky. Consumer sentiment is okay. Revised inflation expectations the same. So yeah, for me, it's definitely mixed data, right? It's not as strong. Things are definitely slowing down, guys. So I would be cautious and wary of taking buys on USD, right? This week we've got massive fucking news on USD. I know that I said last week I'm going to be very cautious and potentially not trade USD. It's going to be the same this week, guys. I'm potentially not trading USD. There's just too much news. All the things that are coming out this week are things that give big moves. Plus, it is non-farm payroll week, and I know that's on Friday. However, for those of you who have been in the markets for a long time, you know that when it's NFP week, markets just normally give you this shitty range the entire week, building up orders, and then they're just holding and waiting for NFP, and then the markets will fly, right? So you can choose to trade this if you want. But in my opinion, if you choose to trade, outside of scalps, for my method of trading, if you choose to jump in and out all the fucking way, you're becoming a machine gunner, right? And I'm not a machine gunner, I'm a sniper. If I have 5 fucking bullets and there's 100 enemy fighters out in the open in front of me, but I've been given 5 high value targets, i.e. high probability trades, I'm not going to waste my 5 fucking bullets shooting into the crowd of 100 people, hoping that I hit one of those high value targets. I'm just going to sit and fucking wait. I'm going to wait till everyone's tired and they all sit down, and the high value target needs to get up and go for a piss. And the minute he gets up and exposes himself, I'm going to fucking headshot the cunt. That's exactly what I do with trading, guys. I just wait for the trades to present themselves and then I fucking strike, all right? With 1 shot, 1 kill. I am not a machine gunner. So that's what we do. Yeah, massive news next week. So for me, yeah, I think we've got so much in weak. I mean, USD is not quite weak, but it's definitely not strong anymore. In my opinion, things are slowing down. I'm going to put USD in neutral, right? Potentially. The news this week will confirm if it's going to get stronger and go back to being strong. It's going to confirm if it remains neutral, or it's going to confirm if, oh shit, things are slowing down. I can now move USD into weak. So then you're looking for, USD Japanese yen shorts and blah, blah, blah. So, yeah, just to now summarize what I've got. Strong GBP. I have only got the pound is strong, guys. Weak Aussie dollar, New Zealand, Canadian dollar, Swiss franc, euro, Japanese yen. Neutral, USD. Okay, that is my opinion on how the economies are looking right now. Okay. Could I be wrong? Of course, I'm a fucking human being. Of course I can be wrong, but that's my opinion based on the data that I've just shown you. All right. Let's start from top to bottom. We've already covered oil. We're at 39 minutes, guys, so I'm going to fly through this, right? If you remember, this here was a potential area for rejection and melt. However, if you go back maybe 2 or 3 weeks videos, you will see that I did say to you guys, I am not entering this here because I believe that the market is going to pull up here. As you can see, I've already marked it here. And what's it doing? That's exactly what it's doing, okay? Again, that was just down to just being in the markets for a long fucking time, right? And just kind of intuition. This AUD CHF is, let me think. Both of them are weak, in my opinion. But CHF would be stronger than AUD, so you're potentially going to see this playing out now and potentially taking sales. Rejecting on the 200 EMA on the daily time frame. It's coming back into your order block area. That could be a good sell. If you want to take it, you can take it. All right. So I'm going to mark it down so I can send you it later. AUDCHF sells. Okay. Buys. After this video, I will post the trade, the markups, all right? Aussie dollar, Japanese yen. Look, here we are. Boom. Back in the zone. You see this small candle with a large engulfing. That is our fucking sweet spot, lads. Boom. Even retested this one here. And away we go. Melty. So you could potentially... now that change. AUD, Japanese yen. You could potentially take this down from here to here or even down here, guys, okay? AUD, USD, not touching anything there, but look, potentially coming back up and retesting this second zone, all right? This would be our entry, or this here would be our entry. Oh, excuse me, I'm not going to touch it. Here's another trade that played out beautifully. Look, bang, retest our zone, and away it went. I didn't take it because both of them are strong. It was two strong economies, and I didn't take it. I did say to you, though, in terms of value, it's in a great area of value to sell from, right? So you can take it. So if you took that, well done. But I already said I wasn't taking it because it was a strong against strong, and I only trade strong against weak, right? It's part of my rules. And if you have trading rules and you don't fucking follow them, what's the point in having rules? Euro CHF, yeah, let me think. Nah, I wouldn't bother. You could, in terms of value, you could take it up. I wouldn't bother, so I'm going to skip it. I'm not going to bother taking that. Another one, look. Here it is, guys, look. Small white candle, blue engulfing. All you're fucking doing at this point is being like, okay, this is our area, look. Comes back, retests that fucking zone, rejects on the 200 EMA, Melty McMilterson. Absolutely. Honest to God, guys, that... like, this strategy just pans out time and time again. You know what I'd like you to do? I would like you guys, right, to enter see any trades that I give, even if I'm like, guys, I'm not going to enter it, but if you want to enter it, you can enter here. What I would like you guys to do, right, is take 20 trades that I say, regardless of fundamentals, whether it's strong and strong, weak and weak, blah, 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 regardless if it's counter trend, it's going against what I'm saying here, right? What I'd like you to do is take the next 20 trades, right? Take the next 20 trades, regardless of fundamentals, and just based on technical analysis, say, look, when it comes here, retest rejects, you could sell it. When it comes here, retest rejects, you could buy it, and just do the risk 0.10%, 0.10%, right? So it's absolutely fuck all. So the maximum that you're going to be risking over 20 trades is 2% over 20 trades, right? And I want you to note down the outcome of all 20 trades. Honestly, please do it. And you will be you'll be like, holy fuck. How many times does Ryan's strategy play out? It's phenomenal. Phenomenal, guys. Again, look, bang. This one's broken free now, so it's probably going to come down here. So what you can do now, once it's broken, you can get rid of this. You can see, it's testing this zone here. Look, it's testing this one right here, which is fine. And I'll put another one in because it could come back down and retest this bottom zone. Okay, so we just need to wait and see what it does. So it could come in here now. Let's see. I suspect it's going to come down and retest here. Again, look, bang, bang. Yeah, I wasn't going to trade it because it's just a dog shit pair. pound CHF. We look at this. Look, it's actually done this. It's done this, and now it's fucking doing that, guys. You can look to the video I posted 2 weeks ago, 3 weeks ago, when I drew this in when the market was here, right, literally here, and I was like, look, it'll pull back down, it'll do this, but I don't have a crystal ball. But the market just, it plays the same patterns over and over again, right? Excuse me. Look, here's another one. Look, bang, retest, rejects, and goes. So we can enter this Monday. We can potentially enter sells on GBP CHF. GBP CHF. I just didn't enter it because it was already Friday, right? And I always say, don't bother entering trades on a Friday. What will happen is the next candle will come up, retest. It'll probably retest this bottom of this pin here, right? I'll show you. The market will probably come back up. This pin here, the bottom, it'll probably give you a candle up, retest, and then melt. That's where you want to enter, right around the bottom of this. Anywhere midway here, it'll come back up, retest, and go. Okay? GJ, look, same again. So sometimes it pulls a little bit behind, right? That's just to hit the stop losses because people put their stops right behind here, whereas I would put my stops up here. You see what I'm saying? Boom, and away it goes. Excuse me. I don't know if I'm going to enter that. You can if you wish, because look, we've already marked up here. You see that? I think I will potentially wait until it comes down here, retest, rejects, and goes. But I might enter it. Who knows? I'm going to put GJ. GBP. JPY. I'll change that to red for now because it will be buys. It's just fundamentally it's buys, right? In fact, you know what? I'm going to change it to buys because fundamentally it is fucking buys. And GBP NZD is potentially buys when it comes back down, retests this zone, and away it goes, right? So buys is GBP NZD. So now we're finally starting to get currency pairs that we can trade, right? You can see it's now playing out. Thank God. We were only getting oil before. Now we're starting to get currency pairs. There's nothing on here that I would trade, so just ignore that. Skip. NZD USD. Look, it's bang in the zone. It may, of course, come back up and retest this zone here. So let's see what it does. But these are potential trades. Your better entry would be here. This is your safe. This is your entry high risk because you might better price, right? Because you might enter as a pins here, and it comes down, but it only comes there and then it shoots up again and stops you out. So it's high risk. If you want the safer, higher probability trade, you wait for it to break, retest this on here, then you would enter here and then take it down. Okay. I'm not going to mark that up just yet as a potential sell for next week. NZD CAD. Sorry, they've broken that level, so all you're really doing is going to the next level. It really is as simple as that, right? There we go. I'm not going to mark it down as a potential sell for next week. Nothing on that yet. USD CAD. That's played out. Look. Boom, 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 boom. Fucking textbook, guys. And what will happen now is, if I move this out of the way, what will happen now is, you see this white candle with a large blue engulf in here, right? If I shrink this down to this white, what you'll find is, it'll go like this. Boom, boom. It's going to retest this zone here, and then it'll melt down. That's what it'll do. If we get negative news, right? Boom, retest here, and then melt. That's what's going to fucking happen. USD Japanese yen, yeah, it's melting down just now. Don't get me wrong, guys. We will see a fucking melt. We will see the market going like this. Bang, bang. At which point, we will be entering here, right? And taking this for massive sales. I don't mean massive risk. It'll be the same amount of risk. But what I mean by massive is we're just going to let it fucking run and run and run and run, okay? Because it will happen based on risk off sentiment, right? And what we got here on the higher time frames, the market is now below the 200 EMA. Above the 200 EMA means buys. Below the 200 EMA is a massive sign of sells, okay? So let's stay frosty. It's just not the time yet. USD CHF would be buys. Just I don't. Why is that red? Should be green if it's buys. So your entry would be here. You'd have to wait for it to break above here, retest, reject, enter, and away you go. Okay. Oil. I know I've covered that. I'll cover it again. I personally believe oil is going to pull back down here. Let's wait and see what it does. On the higher time frames, it's still bearish, right? So I'd like to see it pull down, give a little wick back here, enter, and away we go. Okay. Really looking for. Oh, sorry, I'll go back. Really looking for oil buys. However, guys, markets are pretty fucking weird right now. If something crazy happens in the world and oil melts, the only time it enters sales is when it really breaks below here, comes back up for the retest, reject, and go. And then this would be your sell, okay? But that's it. I don't think that's going to happen. The highest probability is rejects here, and away it goes, okay? Gold. Okay. Yeah, it's fuck all there on gold. Moving on. Silver. Silver has played out twice. Once here, second here. Fucking flew. What would really like to see is, I would like to see it pull up deeper and go bang. But yeah, you may get, look, if we close this down, right, because that's already panned out. What you may get is it's already broken this top here. You see this? What we may see is this, guys, right? It may come back down. Boom, retest here. Next one flies. Boom, 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 boom. What I would then be looking for is something like this. Bang, 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 right? And this would be the entry. So I would be ignoring the market this whole fucking time. And then when it retests here, enter. Exactly the same as this look. Exactly the same as this look. Boom, 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 boom. Retest, reject, away it goes, right? Retest, reject, away it goes. Same idea. Boom, 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 boom. I'm ignoring the market. I'm not trying to chase buys. I'm not trying to chase sells. I'm fucking waiting for the market to do its moves all the way around, come back, reject in here, enter a buy, and fuck off. Okay, that's what you're waiting for. Just wait. People lose money in trading because they can't. It's not because they can't trade. It's because they can't fucking wait. Index wise, there's nothing that I'll be trading on indices. It just hasn't come to my area. So yeah. That is it, guys. Bit of a long video, but we had a lot to cover, right? And this is what it takes in trading. Well, for my method of trading, I should say. Sorry. Of course, if you are a scalp trader that just bases stuff on price action, movement, break above the blah, 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 yeah, that's fine. You don't have to do this. But if you want to get a real solid trading and understand the macroeconomics, understand economy strengths, understand what makes the fucking candles go up and what makes them come down, then of course we need to cover this. That's fundamentals for data. I also use Prime Market Terminal. This is a phenomenal fucking piece of kit. Let's have a look at how Aussie CHF. I just look at what retailers are doing, which is DXM. Down Money Index. They are mostly in sales. Let's have a look at what the banks are doing. They are 50-50 pretty much. So it's like, let's have a look at what pound Swiss franc is doing, because we want to see that, right? What have we got that down as? We've got it down as sales. Let's see what the banks are doing. Oh, banks are in buys and they've added to the position. So we do have to be careful there, okay? Let's have a look at pound CHF. Okay, so what you may find is you're probably going to see this. It's just going to come back down. It will retest here, or it will retest this one here, right? I'll just mark up both, because there's two areas. In fact, I won't, because it looks shit. So what you're potentially going to see here, guys, is this is probably the better trade, right? Instead of taking this sell, probably just ignore it, and we will wait for it to go. Oh, fuck off. We will wait for it to come down. Boom, boom, boom. Right? This, according to fundamentals and data, I'm going to change that to buys. Right? I'm going to scroll that out right now. Put it in buys. PCHF. I would have checked that before I entered the trade anyway, so not to worry. But yeah, this will just be the shittier trade. This here will be the best trade for buys. Okay, especially now that Switzerland have just cut rates and stuff, right? Gives that kind of bit of weakness, strengthen the pound, away we go. So that's it, lads. This is a phenomenal piece of kit. Let's see what retail traders are doing. They'll probably be in sales. They are predominantly in sales, but they are pretty much 50-50, right? Seasonality, let's see what does seasonally. October, this is seasonally, this is buys, and look at the prediction pattern. So yeah, we're in buys, guys. Fuck off the bin off the sales on that, okay? So we'll just do buys. Yeah, that's what we're waiting for. So I'm going to chin this off. Bosh. That's what we're waiting for. We are going to enter the market here, retest, reject, and away we go. Okay, that's pretty much it, lads. If you're watching this from Facebook, we also excuse me, we provide a full month free trial in our premium Discord channel. Here it is right here. Look, I'll put it center of the screen. Well, look, I'm actually doing this live right now. See, it says you are live. I'm doing this live, so if anyone wants to join, they can join. We have trading chat where we give all the what do you call it? The trades. I'm going to have to change this. Trade results. You can come and see all of our users' results. Look at this. This is guys copying our trades while they're learning how to trade. Okay. Look. Bosh. We give 1 month completely free, 100% free, guys. And that's to kind of put our money where our mouth is. So, because there's many bullshitters out there, right? This is to kind of say, look, we're not bullshitters. We know what we're doing. If you would like to test us out for a month, instead of just a week, because anybody can have a lucky week, right? So we'll give you an entire month completely free. You can test us out. If you like what you see, you can then subscribe monthly. However, very important, guys, when you sign up for the free monthly trial, you also put in to subscribe for the following months just automatically. If you wish to cancel, you need to cancel. You need to log back into our website and you need to hit, cancel order or unsubscribe or whatever it says, right? We cannot do it for you because when you give your details in for the free trial, you're actually not giving your details to us. You're putting your details into Stripe, which is a completely different company, right? So you're saying to us, hi, mate, I want to cancel. We can't do fuck all about that. And we actually tell everybody, when you sign up, it actually says on it there, you need to cancel. But for some reason, people never fucking read it. And yeah, they're totally confused at the end of the month when the next month's subscription comes out. They're like, hey, I wanted to cancel. Yeah, well, I can't read your fucking mind. And number two, we already told you, you need to cancel it, okay? We can't fucking cancel it for you. It's the same as if I have audiobooks on my phone and I'm like, yeah, I don't listen to audiobooks, I want to cancel it. Apple can't read my mind to cancel the fucking audiobooks. I need to physically go on my phone and cancel the subscription for audiobooks. It's no different, guys, all right? We don't have crystal balls. So that's it. If you're watching from YouTube, you can jump on the link below in the description to jump on for your free month. If you're watching from Facebook, you will probably get the link above. All right, guys. Thanks very much. I'm Ryan Mack. This is Train, guys. Much love. Let's have a fantastic week trading. Take care.